Yesterday's Bank of England rate rise doesn't seem to have had much of an effect on mortgage rates so far today. According to Money Facts, the latest data from them, the average two-year residential fixed mortgage rate hasn't changed today. It remains at 6.19%. The average five-year fixed residential mortgage rate is 5.83%. That's up ever so slightly from 5.82% yesterday. There are currently 4,444 residential mortgage products available. That is down from 4,507 yesterday. Well, joining me now is Gilbert. She's Marketing Director at the mortgage broker Tembo. Paulie, welcome to you. A lot of incoming for you over the last 24 hours, I'm guessing?
Absolutely. It's been the story of the last year, really, that we've had this turbulence in the market, and yesterday's announcement has been no change. But it's good to see that interest rates have stayed fairly stable from lenders, and that's really because most lenders have already priced in some of these future rate rises.
And also worth pointing out, I guess, I mean, there are still nearly 4,500 mortgage products out there on the market. I mean, there is still choice for those who are looking to remortgage or indeed buy for the first time.
Absolutely. And I think that is the main message that we try and get across to customers is the headlines at the moment are really very scary. And I think it's causing a lot of upset and fear amongst homeowners and first-time buyers. But actually, there are a huge amount of products out there. There are a number of different options that can help people to keep their monthly repayments low, things like interest-only mortgages, extending the term, which can be done for a period of time. You don't have to stay on a long mortgage term for the entire duration of your mortgage. It can just be to see you through a period where purses are really pinched. On top of that, we've seen a really big increase in the number of people looking at guarantor mortgages, in particular a product called a joint borrower sole proprietor mortgage. And these are increasingly popular amongst not only first-time buyers who need a boost to affordability, but also people that are remortgaging and actually just need some support to be able to do that. So there are options out there. I really would encourage people to go and seek support from experts.
Obviously, the money markets are not predicting any reductions in interest rates until early 2025 now. Is that potentially going to tempt some people into just going on a floating rate for now and not risking going in for longer than 2 years?
Interesting question. So we actually saw that variable rates were incredibly popular in the period after last autumn. They haven't been quite so popular recently. I think people are shaken. Consumer confidence has been shaken a bit by increased rates. We're seeing at the moment people looking in for kind of 2 to 5 years as the most popular option. But let's see what happens.
Michael Gove obviously has been calling for a greater take-up of 25 to 30-year mortgages to get over this mortgage shock. I mean, it's worth pointing out there are such products available on the market. No one seems to want to buy them.
Yeah, I mean, there were a lot of headlines a few years ago about 10-year mortgage terms. These, I think, it's quite a scary thing to do to lock in for a product for 10 years. Particularly when the market is so volatile. You're obviously sacrificing any potential reduction in costs in that period, as well as, I suppose, the upside, which is you could have more stability. So we continue to see that 2 and 5 years are the most popular.
That's interesting. I mean, the other point worth making is that in the US, where these sort of mortgages are commonplace, they have organisations like Fannie Mae and Freddie Mac, which we don't have in this country, that enable the mortgage lenders to sort of, market out some of their risk, if you like.
Well, I think it's going to be really interesting to see what comes out of these meetings today. My anticipation is going to be that it will be mostly focused around supporting borrowers who are in crisis, so people that are unable to make their monthly remortgage payments. And it is important to remember that a lender has a legal obligation to a borrower to look at a number of other options before they move to anything like repossession. My feeling is we're going to be looking at maybe things like reintroduction of mortgage payment holidays that were very popular during the pandemic. But it'll be interesting to see if some of these more interesting products that Michael Gove has been talking about could come out of these conversations.
And what about the overall direction of the housing market now, Paulie? I mean, are you anticipating big reductions in house prices for the rest of this year?
It feels like overall expectation is it's going to be around 10%. I feel like a fool anytime I predict anything now because the market has been so volatile. We largely so far this year have seen quite a lot of resilience in the market, and interestingly, we've still seen a lot of inquiries from first-time buyers who I think are really stuck between a rock and a hard place in that rents are going up astronomically, and they know that it's more financially beneficial in the long run to own. So I think there's going to be an interesting situation where house prices will soften slightly, and actually that can be advantageous for first-time buyers who might be chain-free, who are chain-free, and have the ability to negotiate a little bit more. We're definitely moving towards a buyer's market, which will be a welcome change for those looking to get on the property ladder.
Absolutely. Polly, we won't hold your forecasts against you. Good to see you today. Thank you.
Thanks.